Money on my mind, looking for a dime. James Locke in the house, gonna help you shine.
Hello everyone, welcome to the Poole Locke YouTube channel. I'm James Locke. Today we're going to answer some of the Ask James questions of the day. Our first question today is from George. And he says, I feel pretty positively about President Trump and Republican administrations because usually, historically, Republicans are good for the markets. So George, that's usually the historical banter, but be careful not to make any investment changes based solely on political narratives. Remember that old news, right? Political narratives, that's old news. That's a long time ago. And remember that, we had a really good stock market during 8 years of the Clinton administration, the back half of the 90s, right? We had a challenging stock market under George W. Bush administration in the early 2000s, and a great stock market during the Obama administration. Also had a great stock market recently with 4 years of Joe Biden. So you might be thinking, well, gee, James is trying to tell me Democratic administrations are better for the stock market and the economy. Well, no. I'm not saying that either, but George, what I am saying is that I think what affects the markets now has become bigger than who's in the White House and what party they're in. So when you're approaching retirement and focusing on investing for income, you need a more nuanced strategy that goes beyond political headlines. I would be really careful with that partisan perspective, especially when it comes to your retirement portfolio. In fact, as far as the economy is concerned, if it has been on a nice tear right now since, the pandemic, basically, the pandemic has been doing really well, right? The Fed's been working hard to raise rates, kind of stave off inflation. Now they've lowered rates a little bit, but now that they're going to stop, is that really going to be great for the growth economy? Maybe not. So there are significant headwinds to consider. The stock market's done well, but it's done well on anticipation and various economic factors, with long-term interest rates still being pretty high and the cost of borrowing being high. You need to be strategic about your income investments. Are you diversifying? Are you looking at dividend-paying stocks? Are you considering bonds, REITs, other income-generating assets that can provide stability, regardless of which party is in power? Again, I'm not being negative about it. I'm just saying that you have to be careful. I think the decision on the economy and the markets now is much bigger than just who's sitting in the White House. Your retirement income strategy should be based on solid financial principles, diversification, and your personal risk tolerance, not political predictions. For someone approaching retirement, focus on creating a resilient income portfolio that can weather different political and economic cycles. This means spreading your investments across various sectors, considering a mix of stocks, bonds, and other income-generating assets, and regularly reviewing your strategy with a financial advisor who understands your specific needs. It's a great question, and it's crucial to approach retirement investing with a clear, rational perspective that looks beyond short-term political narratives. So great question, and as always, if you would like to send in your question like George did, you can do so by emailing them to poollocke@poollocke.com. Moving on to our second question, we have an email from Clarence. He says, I think President Trump will lower taxes, which should be better for the economy, and it will really give people the ability to use different tax strategies. All right, Clarence, let me break down the tax situation for you from an investment income perspective. The Trump tax breaks from the tax breaks from the previous administration, the first time he was president. They're set to expire. Currently, starting tax rate 12% is scheduled to go back up to 15, top rate 37. It's going to go to 39.6, and the same applies rates across the board. Most political analysts believe that unless we have a completely unified government, like a blue Senate, blue House, blue White House, a complete tax reset is unlikely. The more probable scenario are extending the previous tax cuts, making them permanent, or maybe lowering them slightly, but not dramatically. From an investing for income standpoint, here's what you need to understand. Those, potential tax changes are likely already priced into the market. So don't get too excited about, potential market movements based on tax policy alone. Your retirement strategy should be more robust than that. Let's talk about tax planning strategies for retirees. For instance, Roth conversions can be strategic when you're in lower tax brackets like the 12 or 22% bracket. However, the tax planning opportunities available in the last administration are likely to remain similar in the next. There's no groundbreaking change on the horizon that would dramatically alter your retirement income strategy. Now, one potential area of flexibility might be the SALT, state and local tax limits. Currently, you're limited to $10,000 deduction. Some minor strategies like deferring property taxes or timing your deductions might provide small benefits. For example, you might be able to defer last year's property tax to this year to minimize potential deductions. That depends on what state you're in, right? But here's the key message. Don't make major financial decisions based on speculative tax policy. Your retirement income strategy should be built on diversification, reliable income streams, and a comprehensive understanding of your personal financial landscape. So consider a holistic approach. Diversify your income sources, understand your current and projected tax brackets, explore tax-efficient investment vehicles. Regularly review and adjust your strategy with an income specialist. Remember, tax policies come and go, but a solid, adaptable retirement plan is timeless. Speculation about potential tax cuts shouldn't drive your investment decisions. Focus on creating a resilient, income-generating portfolio that can weather various economic and potential, all political scenarios, right? So, hey, Clarence, that's a thoughtful question. And as always, prioritize your long-term financial health over short-term political narratives. So thank you for your question. As always, if you would like to send in your question like George did or Clarence did, you can email them to poollocke@poollocke.com. And if you like what you heard, go ahead and like and subscribe to our channel. I'm James Locke, your retirement income source. I'll see everyone next time.
Money on my mind, looking for a dime. James Locke in the house, gonna help you shine. Retirement is near, don't you live in fear. Listen up, my friend, let me make it clear. Savings in the bank.